Good evening, everyone. Welcome to Hit the Bid here on July 6th. Hope everyone enjoyed the long weekend and celebrated their 4th of July the good old American way. But after a long weekend, it's time to get back into these markets. So let's jump right in here to our Week 27 Market Watch. Going to be going over last week's action, see what played out, and how it's going to help us navigate these markets as we head into the new week. So let's dive right in here, starting off with our cattle market. We did see good constructive action last week across both feeders and the fats. A little bit of a shakeout middle of the week, but saw the bulls close this thing back near the week's high and above the prior week's high. So that's a good sign for the bulls, looking like things are getting back on track here following that 2-day shakeout. We got our August live cattle on the board here to start us off. Monday's action, we did see price opening up, pushing up to that week's high at 214.52. Pretty decent wide range here, good supportive action there at the 20-day average, finding that support right in the middle of Friday's range, right where we needed it. However, Tuesday and Wednesday's action, we did get a little bit of a shakeout with this market breaking down below the prior day's lows, coming down here and testing this 50-day moving average as well as the prior week's point of control. Good supportive action though, bulls stepping in and buying this market back up right where they needed to. If we take a look here on our lower time frame, we can see this market trading in a wide range there on Monday before breaking down across Tuesday and early Wednesday morning. This market coming off this 214.5 high, pushing all the way back down into this 209 area, which was right into this prior week's point of control. Bouncing off of it, and bulls stepping back in with authority, driving this market a little over $5 higher across Wednesday and Thursday's action, and retesting this week's high at 214.52. These two touches here from Monday and Thursday at that 214.5 level is what's creating our bull pivot as we head into the new week. This is going to be a clear line in the sand that we need to keep our eye on. We want to see the bulls get a nice push above that. Should get this thing marching back towards these all-time highs. A couple levels to keep an eye out on the way up. First of all, if we get bids above 214.52, we should see this thing marked up to 216 fairly quickly. We should see that come into play early in the week. This level is one that kept this market supported back here near this prior all-time high, and during the breakdown, it also kept this market capped here during this 2 to 3 week breakdown, and so that's going to be a spot that this market's going to keep their eye on. So bids above 214.5 should mark us up to 216. That'll be a spot to watch as we head into the week. But any bids above 216, we should see this market just cut right through this big D-shaped profile here from the middle, early June. And above 216, we should see it marked right up to 220. Anywhere from about 219.5 to 220, we should see this market just snap back up to there once we get above 216, as this big picture uptrend remains intact and gets back underway. Look for this next leg higher to keep driving up here towards these all-time highs. Above 220, no resistance at all-time highs, so this market should just keep grinding higher up into new all-time highs. Big picture uptrend remains intact, continuing to find good support over the past few weeks here at the major moving averages. We do have this nice incline trend line here that we keep climbing up, dating back to end of April. So this trend line, as well as our bear pivot here at 207.70, are going to be the spots we want to get defensive. We do have a pretty wide range here in between our pivot points for the week, so we could see this market continue to cut back and forth across there before we get this market rolling back above 214.5. I do expect to see early bids above there and get this thing rolling early this week and have a nice strong trend week pushing back towards all-time highs. However, in the event of us not being able to break above that level, wouldn't be surprised to see us trade back and forth here between this about $7 range. Any breakdowns below this 50-day moving average and this incline trend line, we could see this market to get a little bit of selling pressure in the event of breakdowns below either one of these levels. Below 207.70 is where I urge everyone to get cautious and get defensive, as below 207.70 we could open the door down here back into the $1.90s or the $2 mark. Could see this thing break down back towards this 200-day moving average. However, this big picture uptrend remains intact. This market's looking strong and healthy. We're seeing good supportive action over the past few weeks here. Would be expecting early bids above 214.5 to get us rolling back towards these all-time highs early this week. So everything's looking good and healthy. Just got a couple lines in the sand here to be aware of, and to the downside and to the upside. So just want to be aware of those levels as we head into the new week, but looking for more upside across this cattle market. Jumping over to the feeders now. Similar action over here. Price driving higher early on Monday, getting above that prior week's high. We did see Tuesday and Wednesday's action pulling back, not quite as severely as those fat cattle did, but pulling back nonetheless. Didn't really get a negative close though on this August feeder market. We did see good support at this 20-day moving average, not able to get down here to this 50 as this feeder market remains strong. We continue to climb this inclining trend line, and this market closing the week back here near the highs and above the prior week's high is a good sign for the bulls. We are here only about $4 or $5 off of this prior all-time high, so we could get that done. Could get that accomplished here early in the week. Bids above 310 will get that ball rolling higher, back to 314, and above there we should see this thing just keep cruising into all-time highs. Look for a nice low volatility uptrend to keep grinding higher into all-time highs as this feeder and fat market remains strong and healthy, and we should see more upside as we get deeper into the summer. Over to the corn market now. We are in the December contract, as we will be for a good chunk of the rest of the year. Last week we did open up down here in oversold territory after this breakdown below 434, price driven off of this downtrend line all the way down here to this new contract lows at 416. Once we hit that new contract low down there at 416, we did see this market kind of balancing out here at these oversold levels. We did get pretty hot reading on that on the oversold levels. Then this market snapping right back here up into these averages on Thursday and Friday, showing a nice rally all the way back up here to 442. Just briefly testing above that 50-day moving average, hitting that downtrend line and getting reversed back down here, closing the week at 437 and a quarter about. Up here in these 20 and 50-day moving averages, this is a spot we're expecting to see resistance from the bears. And already here in the Sunday night open, we are getting that nice gap down and some more selling pressure here as we got below our bear pivot there at 434. Coming into the week, I was expecting a little bit more of a balance action here at the moment, but the Sunday night action already getting a lot of that downside underway. A little over 9 cents lower already here in the Sunday evening session. Look for the downside to continue as we head into this week as this big picture downtrend remains intact. Look for those bears to keep pushing this market back towards these contract lows and even down towards $4. Big news event for the week is the WASDE report coming out on Friday. So that's going to be something that this corn market's going to keep a close eye on. Be prepared for some volatility once that news event is released on Friday. In the meantime, we could see some choppy action while traders are anticipating or waiting for the WASDE report to come out. So we could see a bit of a sloppy action here, but as long as we're below 434, we expect to see the bears continue driving this market lower. Just got to wait and see what that WASDE report does and go from there. So definitely expect more downside across this corn market, but we're just going to have to wait and see what WASDE has to say. Over to the crude oil market now. There we go. Over the past few weeks, we've seen this big spike in price following the situation over in Iran. Good back and forth, lots of volatility back here in the 70s, but this market pushing all the way back down. Spent the last week or two balancing out here in the mid-60s. We did get a little bit of a break last week, pushing this market up here towards 67.58, which was the prior week's high and our bull pivot as we head into the new week. Still don't have a lot of directional bias in this market at the moment. I think this market's still going to be digesting all this recent volatility and all this moves, so we could just see a good back and forth choppy action, probing some of these highs, probing some of these lows as we chop here around the mid-60s. This is a really comfortable spot for oil to be trading around. This is where this market's like to be over the past year or so, getting pretty comfortable down here in the mid-60s to 70s. So wouldn't be surprised to see this market continue to chop sideways above 67.58, which is our bull pivot for the week. We should see this market come back up here towards 70 to 72, kind of get back into this range here from 65 to 72. We could see that continue to trade again in the event of a breakout above that bull pivot. However, the big picture still is saying this oil market wants it lower. Over the past couple of years, we have seen this market work its way lower through a lot of rangy and choppy action, with the occasional breakout higher with just more of a technical short squeeze type stuff, and then a little bit of a news thing that caused a lot of volatility over here recently. But in the big picture, it looks like this market wants to continue going lower. Just going to be a slow, choppy ride with not a lot of volatility outside of these big spikes. Once we get any offers below 64.5, we could see this thing get marked down to 60 fairly quickly and carve out another range. Below 64.5, we just want to play this thing level to level. Should go down to 60 and then 55, as 55 has been the low for the year so far, and showed good support here over the past couple months. Below 64.5, we could see a couple of those levels come into play, but here at the moment, just continue to expect to see this market digest this recent volatility and keep chopping around here in the mid 60s. So not a whole lot of bias here at the moment. Keep things short and sweet. I wouldn't get too committed to a position here in the oil market at the moment, at least until we get a little bit of a clearer picture. Now over to the equity markets. The past couple weeks have been pretty good to the stock market. Both the S&P and Nasdaq keep pushing into all-time highs just about every day. We've had about 2 weeks of straight upside here after this recent test of that 20-day moving average following the announcement of the U.S.'s involvement in Iran. However, that was just a pretty easy buy the dip situation off that 20-day moving average. This market continues to show lots of signs of strength. Very healthy action here as this market just is trading in some tight ranges, but just keep grinding higher. Just very typical of a strong, healthy market. Look for that upside to continue and keep pushing up into these all-time highs. The Nasdaq and the S&P both up here at all-time highs, and the Dow is lagging, but we're not far from it. We should see the Dow reaching up into this new all-time high here within the next couple weeks. At the moment, we are fairly extended after about 2 weeks of straight upside. We are getting some pretty hot readings on our overbought meter. We are seeing prices up here above 6,300. Wouldn't be surprised to see a little bit of a pullback here back towards this 20-day moving average, as well as some of these prior swing highs, which are the prior all-time highs. Those are spots we would be expecting to see this market find support in the event of a pullback, but I wouldn't be shorting this thing just because it's overbought, because it always can get more overdone. So let this market keep drifting higher, and in the event of a pullback, be ready to buy dips as this market remains healthy, and any dips will be seen as buying opportunities. So be looking for the stock market to keep grinding higher. That's all we got for this week. We'll see you tomorrow night for closing comments. Have a good night.